So this is another stock that I have rejected. I want to discuss with you why I have rejected this stock. Although this stock meets all of my criteria, I still am hesitating to put my money into this. So if you look at the moving averages here, the 50-day moving average is above the 150-day moving average. Okay. And I guess the stock doesn't have the red line in this case. Maybe it doesn't have that much history. Maybe it doesn't have 200 days worth of history. So the blue line is above the green line. That's fine. It's a strong stage two uptrending stock. There are more than 10 candles in this base. As you can see, I have drawn this base. So that's another good thing. And if I draw this base for you, see that's 0.1. Here's 0.2. It's 0.3. Here's 0.4. And here's 0.5. So I saw this yesterday. This is what I saw. Okay, the red line just came now. So probably the software is slow. Anyways, so this is what I saw yesterday. So the price was very close to the yellow line. The yellow line is my buy point, which is point number 3. Now, if you look at this price action, okay, the yellow line is in the green zone, which is a positive thing. Okay. And I am getting more than 4 points in the base, which is fantastic. The volume has been low inside the base, which is great. Okay. Because if a stock is under institutional accumulation, the volume inside the base should be small. So you have a high volume rally, that is step 1. Then you have low volume consolidation, which is step 2. And then we can expect a high volume breakout. So these are the reasons this base looks good. However, if we look at the data of this stock on MarketSmith, let's go to MarketSmith. Let's look at some background information on this stock. This is CarTrade technology. Okay, so let me open this. Have a look at this. I click on consolidated. Okay. So this is the daily time frame chart of the company. As you can see, the earnings, quarterly earnings growth is good, more than 70%, which is fantastic. Patrick Walker says that this number should be 40% minimum, 40. If that is not 40%, then the average of these two numbers, which is the quarterly sales growth, should be at least 40%, the average of these two numbers, which in this case is true. So earnings wise, sales wise, everything is good. However, you come down to EPS rating. The EPS rating is 28%. Okay, what does that mean? It means that there are, out of the entire stock market, there are 72% of companies in the entire stock market, okay, which are doing better than this stock in terms of earnings. Okay, now if you look at the standalone, see the earnings are very poor. The earnings growth is very poor. But when you look at the consolidated, okay, suddenly the earnings jumps. So this is inconsistency. Okay, probably that is the reason why the EPS rating is down. Moreover, price strength is 57. This means that 43% of all the stocks in the stock market have done better than this stock in terms of 52-week performance. I want this number to be in the 90s. I also want this number to be in the 90s. Okay. 28 is very poor. 57 is very poor. Okay. The group rank is fine. It is 13. So anything more less than 20. So a rank of between 1 and 20 is fabulous. Okay. So these are the things, and management doesn't have any ownership. See, management 0% ownership. That is probably the reason why the ratings are low. Okay. Now, if you look at the number of funds that are holding this stock, the number of funds have been increasing on a quarterly basis. Okay. So these ratings that you see, these ratings come uh, with calculations which are proprietary to MarketSmith. Okay. But the ratings tell us whether there are other stocks in the stock market which are doing better than this company. This rating has come down very low, probably because of the standalone results. Maybe they are looking at standalone data and they are looking at consolidated data together, and maybe they have a proprietary calculation which comes up with the earnings data. As you can see, the earnings growth has dropped from 633% to minus 25%. That's not stability. So maybe they are giving uh, a lot of weightage to stability, not just growth in earnings, but also in the stability of the earnings. I had discussed this point earlier. We want to see growth in quarterly earnings. We also want to see stability in quarterly earnings. Not only that, we want to see growth in annual earnings and stability in annual earnings. Okay. Now, when I say quarterly earnings, I am talking about comparing one quarter with the same quarter last year. Similarly, when I say quarterly sales growth, I am talking about the current quarter and comparing that current quarter with the same quarter last year. That's how you calculate growth uh, on a quarterly basis. But you look at the annual uh, data. Like last year, what was the result in the same quarter last year? That's how these numbers come, which is very important. You have to know how these numbers are coming from. So these ratings to me are very poor. Plus, I see a lot of volatility inside the stock. I don't see tightness in price on the right side of the stock. MarketSmith is marking this, what do you say? They call it cup with handle. Okay. But the relative strength is poor. The earnings strength is poor. Okay. There is no stability in earnings. Management does not own any stock. The relative strength line, which is the line that compares the performance of the stock with the Nifty 50, the relative strength line is falling. See, you need these blue dots inside the base. The blue dot is basically the high, the new high in the relative strength line. Maybe it's the 52-week high. I'm not exactly sure. You can check it later. But as you can see, from here till here, as the base goes to the right, the relative strength is declining. Okay, we don't want declining relative strength. We want a rising relative strength. The stock needs to be doing better than the market. Okay, so given all of these factors, okay, I would say I am not interested in the stock. Probably I will wait till the stock starts to do better on a price basis as well as earnings basis. Maybe I will give it 2 to 3 quarters more. Wait till the price performance improves. Wait till the earnings improves. After 2 to 3 quarters, maybe the stock will begin to look on good on the chart, on the earnings front, on the group rank as well, which will happen naturally. And I will see tightness in price on the right side. When all of these factors come together, I can take a good sizable position in the stock and stay in the stock for the longer term. If my goal as a trader is to stay in the stock for a long period of time, I need to look at all these factors. But if I want to capture a quick move, like a 10%, 20% move, then it makes sense to take a small position in the stock, maybe 2.5%, but be very cautious because this is a volatile base. There is no price tightness in the right. The price has moved up rapidly in the recent 4 or 5 days, which is not what we want. We want tightness in price. We don't want rapid price action. So these are the reasons that I am saying no to this stock. Okay, which is what I wanted to discuss with you today. So if you have any questions or comments, or if you want to discuss this, please let me know. Thank you so much.